The Nifty is down about 130 points, 123.
Markets started slipping a tad bit as we speak, so we're down about 100 points on the Nifty, which closed lower, massively lower, is down just 10 points as we speak.
The market is absolutely fine. In fact, the SGX Nifty was down 200 points. The market opened lower but respected the SGX Nifty low, respected. The price action in our market has been very strong, and consistently the market's been defending the 20-day exponential moving average. The day it violates that, perhaps that trade is nullified, but till then it remains a buy on dips market.
Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Sensex and Nifty end with marginal losses as banks and auto stocks decline. Midcaps outperform the blue chips once again. Rupee weakens against the dollar but remains just below the 80 mark. Container Corp rallies 8% after sources say that the cabinet has approved the reduction of railway land license fee from an earlier 6% to 1.5%. Cement stocks surge. Shree Cement and Ultratech Cement rally between 3 to 6%. This comes ahead of Adani Group's open offer. Meanwhile, Birla Corp tells CNBC TV 18 demand is strong. Expect volume growth of 15% in FY23. Auto major M&M says the SUV demand is very strong and they have gained market share in the SUV segment. M&M is now the second largest player by volume in the SUV segment with 17% share. Biocon soars 3% after it says that it's not looking to sell further stake in Syngene. Suven Pharma gains over 1% after sources say that the promoters are evaluating options to sell majority stake in the company. Well, here's the lineup of what we have in store for you today. It's a packed show. In market opinion, we have Krishna Kumar Karwa, MD of MK Global, and in corporate opinion, we have Rajesh Jejurikar of Mahindra & Mahindra. Well, let's start as always with the day's market action. A range-bound session on the Lal Street ended with marginal losses for the Sensex and the Nifty. Bank stocks led the decline, along with auto stocks and midcaps managed to buck the trend for the second day running. And Singhal is here with the day's trading action. Anuj.
Well, the Indian market was down but not out, and it's a market which has been very resilient, been the best performing market globally among the big markets. Today also there were a lot of negative cues like the dollar index, what happened to US market, bond yields. Market just ignored all of that. And once again, the key point, the 20-day exponential moving average was once again held today. The Nifty tested it in the morning and then had a very sharp 150-point recovery, more than that actually at one point. So that tells you that the market is strong. In terms of individual stocks, auto stocks did see some profit taking today. So names like Tata Motors, Bajaj, and Maruti, Mahindra & Mahindra were all down. There was some profit taking in some heavyweights like SBI, ICICI Bank, Reliance, and HDFC Bank as well. On the gaining side, cement clearly was the sector of the day. Shree Cement led the move with 7% rally. Big one, Ultratech Cement as well, was up 4.5%. That's the pocket which did well. And a couple of these IT names also managed to bounce back. In the broader market, there were some big gains in names like Concord, Vodafone Idea, Z Entertainment, and then, a couple of others like Astral, etc. also did well. All in all, broader market continues to show strength.
Oh yes, broader markets, they have been an outperformer. Anuj, thank you so much for joining us with those details. Here's some expert market opinion for you now. Krishna Kumar Karwa, who's the managing director at MK Global, said that there was scope for broader markets to do well. On the cement space, he said that it's better to stick to the larger names. Listen in.
Whenever retail participation increases, you're bound to see the breadth of the market increasing and maybe some of the small cap and micro cap names also outperforming. But if you look at it from a one-year perspective, the small cap indices are still underperforming the large cap indices. So there is still scope for the broad market to do well. But I think what is happening is that there are so many micro sectors where you see tailwinds coming in, and maybe the first rush, some of these stocks move up and then consolidate, and investors understand the story, and then there is a second round and third round of movement. So some of the sectors like capital goods or EPC companies, etc., or even microfinance business. So I think that is a sector which is going through consolidation and will continue to consolidate. I think it is better to stick to the larger names in that sector, and maybe some of these large mid-cap companies which have all India presence and ability to be participating in the consolidation. And yes, I think second half of the year is expected to do much better for these companies as input pressures, etc., come off and realizations also inch up.
In fact, let's get in some more market opinion now. Cameron Brand, the Director of Research at EPFR Global, said that there have been steady flows to Indian funds. He added that India will see stable interest from fund managers. Take a look.
There have been steady, if not spectacular, flows into dedicated India funds. And India funds have been really second in the emerging markets universe after China in terms of attracting fresh money. And so certainly, I continue to think that that's a likely trend. As I'm sure you're aware, many of the forecasts in the developed world, especially Europe, for the end of the year into next, make somewhat gloomy reading. So a large market with a strong domestic demand story and the promise of 7% growth is very attractive at the moment. I don't see much competition at the moment from any of what you might call the second-tier markets. And I think until those waypoints in Brazil and China are passed, that India is likely to see pretty steady interest from the gem fund managers.
Well, that's about the equity markets in some opinion. Now over to the money market. The Indian rupee weakened marginally against the US dollar. The rupee has been declining for the last few days but is yet to breach the 80 mark against the greenback yet. All major currencies are declining against the dollar, which has been gathering strength over the last few weeks. With that, we move on to the second headline now. Container Corp ended the day over 8% higher after we learned from sources that the cabinet has approved the reduction of railway land license fee from an earlier 6% to 1.5%. Sapna Das is here with all those details. Sapna, what does this mean more for the sector? And there is a clarification here as well.
Well, government has certainly reduced the land license fee for leasing of railway land in the amendments to the policy basically, and the revised rate now stands at 1.5% of the land value against the 6% that is there for the existing players. However, an important clarification here would be that all the new rates or the amended rates apply only for the new players. The existing players will continue to pay the 6% of the land value as the LLF, and their annual escalation rate also stays at 7%. However, they are being given the option of switching to the new regime, wherein 1.5% will be the LLF and the annual escalation rate is going to be 6%. So that needs to be kept in mind. Clearly, this was a strong demand that had come in from various sections of the society, or rather a lot of feedback had come to the government that this land license fee should be reduced. In fact, Niti Aayog at one point in time had recommended that the LLF should not be more than 3%. So there was a bit of resistance also from the railways at that point in time, because nobody would like to lose revenue, so to speak. However, this new policy now rolls out in 90 odd days. That's what we are given to understand. Railways is likely to notify this in 90 days, and post that, government will be able to move forward on its Concord strategic disinvestment.
Sapna, thank you so much for joining us with those important details. A very important story coming in from Container Corp. To the third headline now, cement stocks cemented gains with stocks like Shree Cement, Ultratech and ACC gaining between 3 and 8%. This comes ahead of the Adani Group's open offer. In fact, we have Nigel with us, who's telling us what's really brewing in the cement sector. Nigel.
Well, that's right. Let's break it up into two parts. The larger names then. ACC and Ambuja, remember all through this year, they have done a relative outperformance. But otherwise, the traditional, traditional stocks that find favor with the market have been Ultratech as well as Shree Cement. Both of them have been relative underperformers. So for ACC and Ambuja, it seems that the street is now baking in. A new, more aggressive promoter comes in there. That's the Adani Group. And that's why, they'll be more aggressive in the market. Remember, they've been losing market share. So that's about ACC as well as Ambuja Cements. Actually, the stock prices performance in 2022 should come up for you. For Shree as well as Ultratech Cement, it appears that they have underperformed by around, 10 to around 15% lower in this year itself. So they've underperformed the other two, and they are playing a bit of catch up. So that's why those stocks are running along. In fact, for Shree Cement, which has been a rank underperformer, it was, out of the Nifty. So that announcement has come about. In the run-up to that announcement, we did see a lot of selling. So that's playing a bit of catch-up out there. Now, on a valuation parameter, Ambuja Cements, that's relatively more expensive in comparison to ACC. But keep in mind, any kind of expansion is likely to come about from Ambuja Cements. And Ambuja Cements' profitability is better than ACC. The problem for ACC, what the street understands, is that they have a bit of a limestone issue. Ultratech as well as Shree Cement, they've always traded at higher multiples in comparison to this group, and that's still the case. Now, 5 big reasons why, in fact, the street is getting optimistic on the cement industry. One is cement prices have been increased across the board, all across the country, north, east, in parts of south as well. I understand that in south it could be a little difficult to push it through, but in north as well as east, it's likely to get pulled through. And Birla Corp management, they indicated that demand is strong enough to absorb that. Pet coke prices are down by close to 25% domestically. International prices, pet coke prices are down far more. So that could result in 200 to 300 rupees per ton saving for Q3 FY23. So the street is baking in that Q2 FY23, it could be basing out or bottoming out of margins, and they could see a recovery from here as volumes pick up, pricing picks up, and input costs cools off. Post-monsoon, we know demand bounces back, so that's likely to play its role as well. Strong demand in the second half of the year is what the street is factoring in, and hopes of some bit of consolidation that could potentially play out. That's where you're seeing some of these smaller names, potential targets, so to call it, whether it's Sanghi Industries, India Cements. The street believes that there is something going on out there. We don't have any confirmation, but those stocks just in the last 1 month have seen a big run. Back to you guys.
Oh yes, massive buying in the cement space. In fact, we caught up with Rajesh Ravi of HDFC Securities earlier today, and he said that he preferred ACC versus Ambuja Cements owing to valuation comfort. Meanwhile, Aditya Saragi of Birla Corp believes that demand will support the recent price hike affected by them. Listen in.
Among the two stocks, ACC and Ambuja, the valuation is much comfortable in case of ACC, while Ambuja on a standalone basis is trading north of $180, $190. So we obviously believe that ACC has more valuation comfort as a standalone entity. The stock is trading at less than $110, $120 today, at $120 per ton. So we find ACC to be more comfortable and more, we find there is more upside in case of ACC versus Ambuja.
The price fall would vary from region to region, but my sense is it will be in the range of 150 to 250 rupees per ton. We have recently increased price in the eastern and the western regions to the tune of 15 to 20 rupees.
Okay, and it's time for a break now, but stay tuned. We'll be back in a jiffy with the other headlines.